Good morning, everybody.
Good morning.
Good
How is
morning.
everybody today?
Little nippy in Chicago, 42 degrees this morning.
A little bit here too. Yeah, we had a little rainstorm just come through here, so maybe that'll head your way.
Mm.
Yeah, it's actually longer sleeve. The earliest one was long sleeve shirt weather, so low 70s. It was good.
Low 70s.
Nice. It's nice to have that right now.
Yeah, we're
No
in the
more
middle now.
bugs. There's no more bugs.
We still have some of those. We still have those here. They're pretty hardy here. They don't like to die that easy. Okay, well, let's get the rolling because it's Monday. We always have a lot to do on Monday. So go over and take a look, and we're kind of flat on the Dow, S&P futures, and Nasdaq. And last week, for the week, the S&P was down 0.01% for the week. The Dow was down 0.19, and Nasdaq was up 0.19. Today or this week's going to be, we might be a little flat till Wednesday or Thursday because we have, and this is inflation week. Last week was jobs week, and the jobs didn't look that rosy. And this week's inflation, and the Fed has two mandates, which is jobs and inflation, basically. And so this week we get the PPI on Wednesday, which is the producers' price index, what producers make and what their index is, like Bob and his factory and what he does. That's a measure on him. And then we see how much they pass that on. On Thursday, we have the consumer price index, which is a CPI. And again, on Thursday, we have the initial jobless claims. So that's going to be kind of the focus. And again, they're going to be watching, is the Fed going to drop, which everyone thinks they are now, but would be 25 or 50 basis points. And so anyway, that's what we got to look forward to. And then on Friday, we have consumer sentiment. Earnings this week, we still have earnings. Adobe on Thursday, Casey Stores Monday today, and GameStop on Tuesday are the main ones that I could find out there. So that's what's coming up. Anyway, looks like we're going to be kind of flattish this morning. We'll see what happens. Let's go over to here. So I just put out a list, and Sundays or early Monday mornings, and here's our under the 200 list. You can go see it at the charts of interest under the Platinum channel. You can go through, and I try to put some up. We had, TGTX was on last week. That was from the tell sheet, and kind of, charts, and we'll go over those today. We also have the watch list or the swing trading watch list charts. We had a couple still on Berkshire A and PNW were still on, but this one hit the IRL, so we'll probably get out of that one today. And we'll look at those charts, but you can go look in here. And again, Trent and I we're gonna organize the whole Discord, since we're going to one channel instead of the silver and the gold. We're gonna just all put it in the platinum. I did get a question here that Trent, maybe you'd be better answering this. I got a question from ZK. What is the difference between the stock list and the tell sheet 12 versus Kerry's tell sheet?
So the tell sheet 12 is a 12 stocks from the Kerry's tell sheet. And it's sorted through some mathematical formula focused on the stock price movement. So it's instead of holding a lot of positions, I believe um, it, having a consolidated focused portfolio, but using Kerry's ideas is really more efficient and more bigger returns in the long run instead of sort of diversifying out too far. So that was one thing that I think Buffett has said you can diversify out into mediocrity. And my viewpoint is that my mind can only handle 12 companies, understand 12 companies, and then applying more of a fractal mathematical approach to the fundamentals as well as the stock price volume and volatility, I think it's an efficient way. And so far, it's been a good year with it. So it's just building upon what Kerry is, his research.
Okay, thanks
Hopefully
for
that
that.
wasn't too technical.
No, that's good. That's what he wanted, and hopefully he's on here. If not, I'll get back to him. But on any one of the Platinum Tribe stock picks, and that's just basically we did at the beginning of the year. The Platinum Channel did stock picks of which stocks we thought would be up the most at the end of the year. So we watched those every Friday, and then at the half of the year, like in July, we also did another one, and everybody put in one stock. So we're watching those two, and we can see the difference between a longer range, shorter range. So that's what that is. And then of course we have uh, the swing trade list that we just went over, and we're going to go look at some of those charts today too. And those again, I give you a big list, and I have a bigger list than that, but I give 9, 10 stocks, and doesn't mean you should get into each and every one of them. Doesn't even mean you have to get into any of them. Like last week, we didn't get into any on under the 200 list because it just didn't hit right. But you have a list, you do a watch, you have a plan, a trading plan or an investment plan, and you implement that plan as it relates to your risk tolerance. I have one that's sitting right here, swing trade guidelines. Those are what I use. You don't have to use them. You can go take a look at them and see what I use. And a lot of you have looked at those and then come up with your own trading guidelines that meet more of your risk tolerance and how you like to trade, so, which is good. But we always say follow a plan, either a trading plan or an investment plan, and stick to it. Modify it as you need to. Keep the emotions out of your trading or investing. If you do that, your probability of a better trade or a better investment increase quite a bit. Okay, I'm going to go and let me share here. And go see some charts real quick. Okay, the SPY. Again, SPY came back down. We're right back on resistance again. You got sell orders right above. You come back down and look at the oscillators. The oscillators are still negative on the MACD, kind of a pop-up on the stochastic. So again, we kind of did sideways for the jobs report, and then, we see what happened. ADP came out, and initial jobless claims and jobs report, it's kind of sideways. We might see that same thing just to see the inflation reports come through, the Dow. Same kind of thing. Here's where we're going to open. We're going to open. We close right above the 9. The 9's kind of heading down. The flat oscillators, again, right on resistance. The Qs, which is the NASDAQ. Come up for me. Again, you can see it's sideways. We've kind of been in this little box. We do have the 50 coming up, got the 9 coming back up, but we've come up all the way to where the sell levels limits were, and then we came back down and opened just a little above that today. When we look at other things where money might be going, we've been watching gold quite a bit. I'll go over some gold stuff, but gold has been kind of sideways, for a while, and kind of sporadically sideways. You can see from about the end of April, we had the Liberation Day and gold went up sideways, and now we're seeing it roll up again. And so we'll go over some gold miners here in a minute. But gold is definitely up. Looks like it's going to open up again right under where we see some sell orders. And silver, same thing. Right up to resistance. We're going to open a little bit above where resistance is, and then we got sell orders right above that on silver. We look at Bitcoin. Bitcoin's just been steady. We did this drop. We got to a high of 122, 23 up here. Then we rolled down right underneath the 9, got under the 50, came down to the support level of 110, and then we bounced under that, and the 9 came down right to support, and then started to roll back up, and price action got above that. We're just seeing resistance at the 20 now, but we are between the 110 and 115. So we're starting to see some more positive indicators on the oscillators down here with positive crossover. So We'll see if this trend up continues this week. And if we do, we'll have resistance right about at 115. That's right where our 9 or our 50 is. And it's right where our upper Bollinger is. Excuse me, I'm still fighting these allergies. Ethereum. Same kind of thing, just sideways on Ethereum. We had a big draw up, kind of a little bloop here, and then sideways right along the 9, right along the 20. So nothing's really pumping that up yet. And we also have, the oscillators are a little bit down. We're not seeing that bounce up yet, or the crossovers that we're seeing in Bitcoin. We go and look at MicroStrategy. MicroStrategy was hoping to get included in the S&P 500. I think App 11 got in, and a couple others, and MicroStrategy did not. And so you see what happens. We're going to open up basically downward. We have some support. We've had support before, so going to open here. We'll see if we can get some positive on there. But that's really the news on MicroStrategy. But again, if Bitcoin goes up, that usually is an indicator you're going to see MicroStrategy go up. But right now we're below the 9, below the 20, below the 200. We crossed over 15 days ago or so. See if we can get that back up. Oscillators are looking like they might start to turn a bit, but not with opening here. We'll have to see where it closes. NVIDIA after earnings, is continuing its slide down. We were trying to get past the 2 or the 50, but now we're down below the lower Bollinger Band. That's about where we're going to open, right on the lower Bollinger Band. The oscillators don't look good, but eventually, if we can get this down and we see the 9 and the 20 are even here coming down, we see that come down and we get price action over it, and that's when we catch a swing back up. So for a swing trade, we're still waiting on NVIDIA, but it may give us an opportunity in the future. Meta, we see this hump over the resistance and come back down, and now we're just fighting resistance right between the 9 and resistance here, and that's about where we're going to open up on Meta. Again, the oscillators haven't crossed except for the stochastic has. We'll see if the MACD does that, but we're going to have needs a catalyst, whether that is the PPI. It certainly wasn't a jobs report that didn't get it past there, and we'll see if that does it this week. But again, just kind of watching Meta. Microsoft, same kind of thing, kind of the bump up sideways right along resistance. We're under the 50. You see we had 4 days, can't get past the 50, and then we close down on the lower Bollinger Band. The oscillators don't look very good either, but if you're invested in it with Paul Tudor Jones, here's your 200. You're still above that, so you're doing pretty good on that. Google's had a nice run. They had that the court came out and wasn't going to take away their Chrome from them or break them up. So we had this big gap up, and we've had 3 days outside the upper Bollinger Band. We're going to open up right about at the Bollinger Band. We always expect no more than 5 candles outside of either side of the Bollinger Band. So we expect this to pull back in. And then you have some sell orders up here at 242.52. So a little bit above where we closed at 234.96. So I expect it will be right there about on the Bollinger Band. It appears when we're opening up. Still got a gap there, but it's got some good momentum on Google right now. Apple kind of did the same thing because they were allowed to keep the Google app on their phone. So we had that gap up also. We gapped up, except for Apple. We have resistance right above where we're going to open. So we're going to need something to get us past that. And that doesn't mean we can't wake up to where the sell orders are. We see that happen, goes up and comes back down. We'll watch the 9, see how it's coming up. But right now, I wouldn't be too excited about getting in at this point on Apple as a trade. But if you were, an investor and you saw this, you might have got in here. You're still above the 200 as an investment from Paul Tudor Jones. And then Tesla. You guys, some of you have Tesla. Tesla's kind of really had some good movement volatility wise. It's been fighting the 200, came back down, bounced off that last week, came back up, and now we're right on resistance again. So oscillators have turned around a little bit, but again, we have resistance, some sell orders right up here at 360.88. So again, nothing that says hop in with me with this resistance line. We're right here about where we're going to open, right on resistance. And then Amazon. Oh, come on, Amazon. Here we go. Amazon again, right at resistance, had this gap up and went above, right above the Bollinger Band, opened at the Bollinger Band, got fought back down on Friday, right back to resistance. We've had this before. You can see you can pop up, hit the sell order resistance level like we tried here again, and now we're back down. Gonna watch the oscillators. The MACD's kind of flattening a little bit. The momentum indicators gone from 61 to 56, so we're seeing a little more negative momentum again, playing this route right here. I like to get in where we drop down and get above and then swing back up as opposed to at the top. But you know, it all goes down to what your risk management plan is. Palantir. Palantir has just been on that. Here's our little bump, and then we've been sideways. We've seen quite a few of these. There's Mag 7 types, just heading sideways. Again, we're right here, going to open up about where we closed. You've got the 9 and the 20 and the 50, all there squeezing into one space. And, you know, something's going to, got to give at one point, but the oscillators still don't tell us that we're heading up yet at this point. Now we go to our watch list, and we had 3 on. Berkshire's been on for, I think, just about 3 weeks. We got in, right? We played the Paul Tudor Jones and a swing trade on this one. We got in. Here's our cost basis right at the 200. It's gone up. It's still between support and resistance. Resistance at the upper Bollinger Band, support at the 9. Pull this down so you can see the Bollinger's kind of flattening out up here. So I'd expect this to come back down a little bit. Now you start as a swing trader saying, okay, here's my cost basis. When do I want to get out? If I want to get out below support, you might want to come back and put in a, you know, a sell limit, you know, where you've seen it before, here, in between here. If you want to, you know, it just depends on how much you want to save on your on your cost basis and your profits. You know, come back, give it a little room in case it drops down and pops back up. But you know, we come up, see sideways, but we've seen sideways before when it hits support and then starts taking off again. So again, we're still in on a swing and on an investment on Berkshire. A is a healthcare stock. This was another one we got in right at the 200. Had good support at the 200. It tried to like heck to get down below it. It kept coming back up, and then took off on Thursday and Friday. Actually went up. Probably could have got out if you wanted to. This is the sell order resistance level, which is inside the intermediate resistance level. So that would have been a good area to get out. I thought, you know, we're got some good look on the 9, the 20, the 200 or the 50 heading up. We're over the 200. We've got good oscillators going. So as a swing trade, you know, why not keep it in on a paper trade portfolio? If you want to put in something, you know, for a sell limit or you know, I like sell limits. I'd come back at this level here, stick it right in here in case it pops down, you know, otherwise try to ride this up, get past these sell orders, you know, because your next level of resistance is at 134.47. So it's been a good one right now. We're just going to paper trade it up and watch it. PANW kind of missed this one. Oops. Hold on. PANW. Palo Alto Networks kind of came up and it hit the 9 or hit the intermediate resistance level, and I didn't see that, so I didn't get out. But that's normally where I will. So if this continues up, you know, I'm going to get out of this one just because of that level right there. A lot of people don't have to. You know, you can still go up to where your sell orders are, and they are right at the upper Bollinger Band. But if this thing pops up, I'm out. If it pops down, here's our cost basis, the 200. You know, I'd probably put in right about here. We see this above the 50. I don't want to take too much. You know, I want to take a profit, so I want to. But again, it could bounce and go back up. But if it gets up above this level, I'm certainly going to get out myself. New ones we got, MHK. There's Mohawk. We talked about this a little bit last week. It popped up. I don't like buying outside the upper Bollinger Band, so I like to wait to see it come back down a little bit and maybe catch it. It's got the oscillators moving up. Mohawk, you know, they do carpets and stuff. So this is like a housing play. And with interest rates potentially going down, you're going to see, you know, some of the home builders and some of these guys like Massey or Masco and Mohawk and these guys that help supply housing probably bounce up. But I want to get it back on the inside. But I like the oscillators and I like this trend up. You know, the support's at the 9. resistance at the upper Bollinger, and got some sell orders right above that. We also have PKG. Again, a packaging corporation. It came down. Here's our, our up, sideways back over. We're above the 200. Came up, hit the Bollinger, back over sideways, and popped up a little bit. Still have some pretty good oscillators. Here's where your resistance is. We've got sellers at 223.48 and your supports at the 9. So follow your trading plans. Always try to get a better price when you get in. FRT. Yep, where'd it go? Yeah, just for swing trade potential. I like it because it got above the 200. It took forever. Seems like 4 or 5 days. We had a nice run up. Boom, 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 boom. And went up. Friday confirmation. Got some sell orders right at the upper Bollinger Band, and we got nice oscillators. So this is an investment trust, real estate. Okay. So again, this is probably playing off the potential for interest rate cuts. We'll see what happens. It could be affected definitely by the inflation numbers. SMTC, another one. Again, Semtech, it's playing between the 9 and the upper Bollinger Band. You got some sell orders right above it, but it's got good momentum. We're above the 200, 50, 20, and the 9. Pick this up a little bit. NTAP, ETAP. This one's just right along the upper Bollinger, and definitely here's your resistance up here at 124.74. I'd always try to get, you can see it, it opens here and closes, and then it opened here, went down, closed up. So again, if you can catch one of these wicks down, catch it inside this Bollinger Bands, if you believe that and it matches your trading plan, you might be able to keep that and keep that riding up, unless there's some kind of news that we don't know about that knocks it off. But it's got some nice momentum on that particular stock. And if you look at under the 200s, there's nothing that we had left on under the 200s. So I'm just going to go through General Mills, above the 9, above the 50, right along the Bollinger Band. Oscillators look pretty good. Watch out for your sell orders at 51.51. CHD, so some of these consumer stocks, again, I like it because it went above the 50. It's above the 9, 20, got above the 50, held on that up Bollinger Band, and it's above support to this is, I don't know what that is. Take that off, make it look better. Sell orders above. Again, these are under the 200, a little riskier. You want to keep your stops pretty tight. PG, Procter & Gamble, went sideways and kind of up above. Now we're above support. Again, resistance at the upper Bollinger Band. Again, these are mostly slower movers. These Procter & Gambles, they're not technology stocks in any way. GEHC, another one under the 200. This one popped up really well. Went right from the 50 up to the upper Bollinger, which is where it closed. We just got to watch. You're going to have both the 200 and sell orders at about the same area right above you. So you always look for what your upside reward is compared to your downside risk. And right here, we're kind of in the middle, but the oscillators are looking pretty good because of that big old candle we had on Friday. TFX and Teleflex, kind of a nice run up, got below the 9, popped up, closed above it, kind of a slow mover kind of deal. Oscillators are kind of slow. You've got an easy one here as far as here's your support, here's your resistance, here's where sell orders are. Not a fast mover unless we had some news on it. More real estate. We've been watching this one. We watched this last week, up, overside, and back up. We just got to watch because these are hard levels of resistance, the 200, and then we have sell orders right there. So maybe not so much on the upside on ARE, but if the interest rates come out favorably and they're going to come down, you might see some of these real estate stocks roll. EQR is another one. This one's above not only the 9, got above the 9, got above the 50, outside the upper Bollinger Band, has a little room to run on this particular one here. And then I'll go over some that do not have intermediate resistance levels up, but they're moving up. Fox A. I don't like the fact that we're curving here on the Bollinger, but you do have a nice run up and support at the 9 and some sell orders above that. You've got URI. running right up the 9, between the 9 and the Bollinger. Again, kind of flattening on the Bollinger. So we may be getting close to the end of this run, but still no intermediate resistance level. We do have some sell orders above it. I don't like to trade these myself, but I know a lot of you guys do. WP Kerry, been above the 9, between the 9 and the upper Bollinger, got above it. I'd want to pull it back in if I could, but this could ride up. You got sell orders at 69.32. Oscillators look good, but no intermediate resistance level. Wayfair, this one really rode up. It's above the Bollinger Band, and it's right up against sell orders. So I'm not sure how much gas this has left, but a lot of you momentum type traders, you like the momentum and you trade it, and it works out for you, then that's fine. For me, this is a little too close to resistance, but I wanted to put it out there just in case you wanted it. HBM, Hudbay Minerals. It's had a nice run up after earnings. So gapped up, came back over. Now we're within support and resistance. Watch your sell orders up here at 12.95. ANET, another one that's run up, got above the Bollinger Band, closed right about on it. Sell orders, no intermediate resistance. That turned around the Bollinger Band, got the oscillators turned around also. 50, 200, 9, and 20, all above. So, again, a momentum play. You got to watch these a little bit because that intermediate resistance can come on and stop you pretty quick. But you can ride, the trend's your friend until it's not. So, again, GLW. Sorry, there's always a lot on Mondays, guys, just because of the weekend. GLW is running right along the upper Bollinger. Sell orders up here at 72.60, but no intermediate resistance level. So, a nice little momentum play on GLW. And then Unity. Unity had a pop up. Okay, I like to get them inside the Bollinger Band, but it's been playing kind of between that. I don't know what made it pop up at all, but again, some sell orders above. So there's some momentums for you. And I just want to do a couple golds. GDX, gold miners. We've been watching gold miners. Again, momentum's in the gold. So sell orders up above a little bit. Some of the others that are out there, SGDM. And some of you guys have already seen some of these. This is a Sprott Gold Miners ETF. Got to watch the volume on this one, though. I know that someone's brought this up before. It's really low volume, so I don't like to trade these just because of the spreads. But I thought I'd put it on because if it's within your risk tolerance and you like, volume doesn't mean anything, it's not as important as it is to me. And this may be something you're interested in, but it's not for me, really. KGC. Kinross Gold. Again, this has millions in volume here, so this is a better one from my point of view. Running right up on the upper Bollinger Band, and again, you got sell orders up here, but gold's got some momentum rolling for it. SSRM looks the same. This is SSR Mining. Okay, you got some good volume on that. Nice run between support and resistance. Right now, you're rolling along the upper Bollinger. Again, sell orders right above. And then the last one is Ring. iShares Global Gold Miners ETF, just another like GDX, again, kind of rolling up. So as long as gold is rolling, gold miners always seem to be a good place to be. Put your stops in if you get in, and or sell limits on the bottom. So in case something turns around on you, you can get out and you don't lose anything. But we have a lot this week. Sorry it took so long, but we went through a lot of stocks. So sorry, Trent.
Oh, no worries. So let's just review. Last week we talked about volatility. We talked about suppression of the VIX, the hedging strategies of market makers, and today what we have is based on the options market. We have a range of 6,500 on the top end. That's where all the call options are being positioned, and then all the put options are being placed in at the 64.30 range right here. So as you can see here, this is Friday's close, Friday's open and close. It made a run above 6,500, but there was enough pressure keeping the S&P down, and it closed below 6,500 at 6,481. And what that tells me is there's not enough um, energy or volume to push the S&P 500 higher. Rather, there is so much hedging going on that this is being squeezed between this channel that we have seen established, really, in a way, established back here on July 31st, where it became resistance at the 6430 range area and made a break above it on August 12th, got into it, broke back below it, made another run August 22nd, and then it has just traded basically, except for really one day, September 2nd, in this channel. So Friday's job numbers that you would have thought that would be the catalyst. That would be the catalyst for the S&P to go higher or lower. It wasn't. Today, it looks like to open right in this range again. So my question keeps coming up. What is going to cause the S&P 500, which is 30+% of it is moved by 7 companies. What is going to cause these companies to go higher or to go lower? When I look at the comparison between the equal weight or the market cap weighted S&P 500, which is SPY, and the equal weighted version of the S&P 500, which is RSP, what it's telling me is when I look at this chart, in my opinion, we're basically stuck in sort of a channel once again that was really started back in at the 1st of August or so, or at the end of July. And we're just keep going back and forth. And what we saw Friday was a distribution from the market cap weighted S&P 500 to the equally weighted S&P 500, meaning people are redistributing their assets from just 7 companies to possibly the other 493 companies that are in the S&P 500. So to me, when I look at this is giving me a sign that there is not enough um, what is it, volume, energy, whatever you want to call it, going into those heavily, highly market cap weighted stocks, those top 10 holdings in the SPY. Instead, they're looking for value. So they're going elsewhere. And they've been basically bouncing around in this range for a while now, for over a month. And so what I'm curious to see after Friday is how this week sort of rolls out. Are we going to see a reconcentration into 10 companies on the S&P 500, which is the mega cap, the hyperscalers, the Nvidias of the world, or are we going to see a redistribution for value? Are we going to see more investors or more institutions redistribute their assets towards companies that are undervalued or oversold and leave the overbought, overvalued companies? And I tend to think I'm more on the side of redistribution of assets. When you look at the AI run up since, for what, 2 years now, those companies are getting well overvalued. And I did a TikTok video yesterday, and I said my belief is Nvidia is going to the 130 range again. You're going to see a redistribution of assets. You're going to bring that company back down so they can recalibrate and become more of a value. And then as we go into the second half or the fourth quarter of this year, you're going to see a run towards 200. Will that happen? Only time will tell. But it just seems to me if I'm a institution and I've made a boatload of money on 7 companies and I have no more cash to put into the market or put into these companies to push them higher, I'm going to start to deleverage. I'm going to take my profits and I'm going to pull back and put money on the sidelines so that I can come back and buy these large market cap weighted AI driven companies at a more reasonable price. And so I believe that is the process that we're in. Now, take into account this is the VIX, the volatility index, and just think of this as a spring. This is a spring, and it's like a coil that is on your car, or if you got one of those lifted trucks that are like 12 feet above sea level, it's a spring. And what the VIX is, when you see it get down below 19, it's that compression of that spring. And at some point, which is right in the area we're in here, that compression can only go so far, and then it only has one place to go, and that is up. Now, if you compare this, the VIX and its price, and the S&P 500 and its price, they're oppositely correlated right now. The S&P 500 is all-time highs. It's struggling to go higher. So the only thing I believe can happen is that correlation will flip, which means volatility will go up and the S&P 500 will go down, which means your mega cap companies, your top 10 holdings in the market cap weighted S&P 500 will go down and recalibrate. And that's part of that whole recalibration of AI, the recalibration of those 7 to 10 companies in the S&P 500. And once that calibration starts to trigger, what it's going to do is create fear. And when fear comes in the market, your average 401k investor freaks out. Your average retailer investor freaks out. They get on the phone with their advisor, the broker, or they get on their brokerage account and they start selling. And that's going to accelerate this volatility. Now, the volatility may not get up into the levels of April or past mega F bucket spikes, but what it will do is cause a chop bucket event, and that causes redistribution amongst the big institutions, systematic volatility traded funds. And remember, they don't care about fundamentals, they don't care about headlines, they care about math and rate of change. When you see rate of change start changing within the VIX in the volatility market or volatility environment, when you start to see 20% changes day over day, these institutional investors recalibrate their portfolios and they go risk on from risk on to risk off, and then that creates fear in the retail market, and boom, you go. So when I'm looking at all this, I'm like, this spring is being so suppressed. At some point, this pricing of AI and a lot of these companies, it's not to say they're bad companies or anything, they're just priced overvalued and they need to recalibrate. And the money that moves markets is said, I'm tapped out. I have no more markets to deploy. I need to create profits. I need to create cash so I can come back and buy these companies at a cheaper price. Now, believe we're in that process. It's a question of, and I thought maybe Friday would be a catalyst to trigger some of this. Obviously, it wasn't. We did see that failure to go higher above 6,500. So that tells me the market is, it jumped up on Friday, got as high as 6,532. And at that point, the institution said sell, 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 and it drove it right back down below 6,500. So as I spoke about last week, September, 55% of the time, it closes the month below into the negative. It's since 1928, it's averaged 1.28% negative return. So this is a month where you review your process, you review your risk management plan, and you look at it and go, hey, I got some profits here. I got a 40% profit in XYZ. I mean, hell, if you're in app loving, and if you've been in app loving since we introduced it into the tell sheet 12, you're today going to open up at $538.24. Friday it closed at $490.24, and the reason is because it's being added to the S&P 500 on September 22nd. You've made a boatload of money if you've been in this since we introduced it to the tell sheet 12. Maybe it would be a great idea peel back some of those profits, put some cash on the sidelines, and look for some opportunities in tell sheet 12 in the near future or other companies within Kerry's tell sheet, as well as some swing trade ideas that Mark has discussed. So this is a month where you check your ego at the door. This is a month where you check your risk management process. You add some variables that are not FOMO related, but rather mathematically related, and you add to your risk management and your process. And I believe you're going to create some incredible opportunities as we go into the fourth quarter of this year, because I think there's going to be a pretty sizable run towards to the top of the mountain by year's end. And you got to have cash, you got to have, dry powder to participate in that. And so I believe that's where we are at right now. App Lovin is part of Tell Sheet 12 that was introduced a while back. It's going to explode today. I don't think I think it will close lower than where it's at, maybe down around the 500 range. So don't get sucked into buying it at the open, because there's somebody else out there trying to pull the rug out from under you. So that's my take on the market today. I'm looking for that catalyst that's going to propel this thing to. I'm looking for the catalyst that's going to get volatility to spike. I, I thought it was the jobs number. Now it's the Fed. Maybe it's been a buy on the rumor, sell on the news event as we come into the Fed meeting next week. We'll see. Only time will tell, but the best thing you can do is risk manage around this. So let's open it up to the floor for charts. I know there's some
We got a
questions
lot of
about,
charts.
huh?
We got a
A
lot
lot
of
of
charts
charts.
today. Yeah, everyone's got
Well,
must have saved up all weekend.
well, Mark,
But I agree with. Go ahead.
real quick. Okay, go ahead, and I'll come in behind you on this one.
Yeah, Bitcoin. This is September's the tick as seasonally the worst month for Bitcoin. Also, so same with the markets. But so I would agree with you on that for sure. And then we do have the inflation numbers, the PPI, CPI this week, and then of course next week the Fed. So the market's going to be on edge because of all this, just like last week on the on the jobs report. So all right, you
Yeah.
guys have given me at least 15 charts, so we'll try to roll through these. CIGL, Joseph had brought this one up. When you look at it, short term, I'm looking, this has been flat, flat, flat. And you look at the volume, 29,000, 41,000, 57,000, 7,000. Volume's been bad until like last Thursday. And then all of a sudden, 133 million, and then 18 million. So something happened in Concord International Group Class A to make it kind of pop up. So then when you want to go back and take a look to the left a little bit here, and take a look at the long term and look at these candles. This one came up, okay, got above the 9, opened way up here, wicked up, came all the way back down, wicked down, closed here, and then we got all the way up here. And then look at this monster candle here. And I have no idea what this company is. I don't know what the news was. Dropped it all the way down, but we've had a long history of flatness here, and it looks like a pretty new chart or a new stock because we don't have a 200-day moving average, just a 50. It started back here, so again, looks like we're moving up, but again, you're gonna have some resistance here at the 50, and then you've had these big old candles here, so there could be potential there for people coming back and taking profit out of that, like we saw here, so. It's nothing. I'm outside of the Bollinger Band here, and the volume is just weird from 41,000 to 133 million. You may have a play up to the 200 or the 50, and maybe the intermediate resistance level at 652. But again, we saw 133 million in volume here. And then down to 18 million in volume here. So the volume is going down after whatever made it go up. I don't know. You have to look into that. I don't know what happened fundamentally on this, but again, it's a higher risk. So if you know about it and you like the stock, you may want to trade in it, but it's not something that I unless I research into what's going on here, I would blindly put my money in at this point. But thank you for that chart. Spruck's got me some here, LTBR. And this is Lightbridge. And Lightbridge is trading right along its intermediate resistance level and right along the 50, okay, which is flat. You got parallel kind of flattish Bollinger Bands, and you got oscillators that are downturned right here. We'll go back and look a little to the left and see what's happened. Well, you got, we've been up here before, okay, up here before, and that's why you have resistance here. And also you see where it's also gone up to where the sell orders are. So, we're at resistance. Can you go up to sell orders? Well, we've already been there. We've done this before, down. We've done this before, down. Let's see if it can hold. There's resistance. Let's see if it holds on the 50. But again, I need these oscillators to come back up and give me some more positivity on this price action. I don't see that right now on this particular stock. Open. This one I think is pretty cool. I didn't see this one. This one doesn't have any intermediate resistance level. It has some sell order resistance up here at 713, but it's had a nice run. Now, if you want to get in up here, it's really up to your risk tolerance. What's your potential reward on the upside compared to your risk to the downside, which is down to your support level. This would have been one that got above the 200, got above the 9, then got above the 9 and rolled, and you come down to your oscillators and you see, okay, they're starting to turn positive. This would have been nice to get in, in this area, which is what we try to do, and swing it up, as opposed to trying to get in above an upper Bollinger Band. But again, it depends on how you trade and what your trading plans are. If you want to try to ride this momentum up. But again, you do have some sell orders just a little higher at 713. But the chart, definitely liked it in the direction it was going. I wish I'd have seen this a little earlier, but nice chart. What else we got? CRML from Spruck. It's making me work today. Okay, we see what happened with critical metals. We've been watching critical metals, got above the 200, wrote it up. We've talked about this. I think he's brought it up last week. Here's that intermediate resistance level that is where I get out. I just do, because I see this too many times. It comes up and then heads back down. You see the 9 comes up. Kind of, we've seen it where it comes closer to the intermediate resistance. This one started coming a little bit further away, but then you get price action underneath. You got the Bollinger Bands converging. You got the oscillators going down. So that was a nice ride up for a swing trade. But I'd be out and I'd be waiting for it to come back down and maybe catch another one up. If you got in it for a investment and just use the 200, you're still kind of in that one. Okay, because you got in here, you're still in. If you're, the only thing that I don't like is the 200 still heading down. So if you actually went down and touched the 200, you're going to lose money because this is not trending up, it's trending down. But thanks, Spark, for giving me those three. Payment, KG, okay, KG, oops, KGOS. I thought that's what, oh, GKOS, sorry, GKOS. Okay, let's see what we got here. This is Glacos, okay. Glacos has under the 200. We are under the 50. We are under right at the intermediate resistance level, which we've been hitting quite a bit. Here's where your sell orders are. Got converging Bollinger Bands, and your oscillators are kind of heading in the wrong direction on this one. Let's go back. Oh, look at that. Okay, so we had some earnings here back in February. Negative 60 cents, dropped. We had some earnings here, negative 32%, so that got a little better. Then we had earnings here, negative 34 cents, so about the same, dropped. Okay, so it looks like we're going to be playing along this resistance level unless we can get past that with some momentum. For some reason, some news comes out. Right now I just kind of wait on that one as a trade, and even as an investment, we're underneath the 200. And again, I don't know what Glacos does. It might be a fantastic company, but right now the charts aren't giving me any good hope for a swing trade on this one at the present. Okay, let's move this back over. And Payment also sent in Oscar, SCR. Oscar. Oh, there you go. This one I like better, Payment. you got to watch out because here's your resistance level, and it's at $20.31. So that's your upside potential, and you got a little bit of sellers right above that. You're trading outside the Bollinger Band. Uh, Again, so what's your reward? Your reward's from this level up to your major resistance level up here. Your risk is from here back down to your support at the 9, which you've hit before. So again, you're getting in at the end of the run, in my opinion, the way I look at it from these charts, unless something comes along and really drives the market and catalysts and can push you past these levels. We've seen what's happened, at intermediate resistance, especially when it's close to sellers. But it's a nice upward trend on Oscar, but we may be toward the end of that one. But thanks for bringing that up. And then this is still on our watch list on under the 200. We brought this up last week on Tuesday, right here at this level when it was at 29.33, and this was a tell sheet. I just went back and I looked at some of Kerry's tell sheet. I said, well, this one has the potential, and then you saw it kind of popped up, and then we got a change in direction of the Bollinger Bands. Outside the Bollinger, outside the Bollinger, outside the Bollinger. I'd expect it to come back in to a degree. You're going to have some resistance at the 50. If you get by the 50, you're going to have some hard resistance right at the 200 where we have sell orders. But, if we'd gotten in like last week, you see the 20 came down. We got above the 20 and we started riding the Bollinger Band. But, watch these resistance levels up the top. But we talked about this a week ago, Tuesday. So, yeah, so that's got some nice momentum on it. UNH.
Thanks.
Yeah. Thank you for bringing that up. I forgot to go over it. I was going to go over it, so appreciate it. United Health. Look what United Health did. So here's your resistance. So it popped way up here. We're still right along the 9, right above support, but we still have this sell orders right above there. So that the market out there is still selling when it pops up. Can it go past that? Yeah. But again, we got converging Bollinger Bands. We got kind of diminishing oscillators down here. Still, I just watch this one, okay? If we can start getting the Bollinger Bands to turn, we start getting some momentum up on the upside, we're going to watch it. And again, we watched it back here. And Buffett got into it back in this, well, let's go back. I think he got into it in the previous quarter. So he probably got into it right about where we are at this level, where we are again. But we've been at this level. We need to get up and above this level here, which is the sell orders, and then get these Bollinger Bands to turn. If we can get United Health to go, we got a long way to go, but we're not there yet. We're not telling us to really invest, or to trade in this yet. If you're a long-term investor and you don't mind trading under the 200 as a long-term investor, and United Health, potentially a place to enter, I still would hold my money. And like Trent said, there's going to be some opportunities coming up, and United Health might be one at some point, but why jump the gun until the charts tell you what to do? ELV, another healthcare. And let's get a little closer. You can see this one just kind of dumped, had earnings came out, dumped it off, 772. We're right between support and sell orders. We get a little closer, so take a look at the chart. Having a little trouble getting around the 50. The 50 is turning down and to the right. We got the 9 now coming turned down. So we're underneath the 9, right on that level. Got the oscillators turning, even especially stochastic. So I think we're probably going to maintain charts tell me with these Bollingers going sideways, we're going to go sideways until something pushes it up. But there would be some room. So I'd keep this on your list, and see if we start seeing any kind of a move upment. When we see the 9 come down and maybe hit support and ride this thing up a little higher on ELV, but it's not there yet. Baba, I haven't looked at that one in a while. You guys are really keeping me busy here. Oh, Baba. Unfortunately, Baba came up and hit my resistance level here. And so that's where I'd probably got, you see, you had earnings that had popped it up, gave it a nice little gap up. 251 a share the next day. Off the excitement, we're outside the Bollinger Band, popped up. It came back down right on resistance. And you can see the excitement kind of waited and came back a little bit. The bulls beat it back up, but we're right on resistance. So again, it's not a place where I like to enter, close to resistance. I like to enter closer to a support level. CRWV. Long term, he wants to know long term. Again, this is a new one. So manual, it's doesn't have a 200-day simple moving average yet because it hasn't traded enough to even count 200 days yet. The nice thing I like about this is we're on support. Okay, and again, we haven't traded that much. I want to see this 9 come down, maybe pop support like we see it on the top side when it comes up, and we can tell it's a turn because it goes down. Same thing happens down here a lot. If it goes down and starts coming back up, that might be a good idea for a trade. Now, CoreWeave, according to Kerry really likes this stock, and he has it on his tell sheet. And I think this is the stock he said that he really likes, and this is what he would buy. Is that true, Trent?
Yeah,
CoreWeave.
he likes a lot.
So I think with CoreWeave, you might want to wait until we're hitting the support. That's good. I want to see it get above this 9 and start getting some momentum on the oscillators and start going up. And when that happens, that will be what I would consider a swing trade. And maybe if you're a long-term investor, that would be an entry point for you for a long term too. Just my opinion.
I think there was a
Go ahead.
question about the comparison between that and
And
MBIS.
Yeah, let's take a look.
And if I remember, I ran sort of a comparison through and I'll post it up here.
Here's NPIS right here.
Yeah. One's more of a conservative, MBIS is more conservative growth rate over the next couple of years. And CoreWeave is more aggressive. If you're looking for more of a aggressive play, CoreWeave would be it. You're going to get a bigger probability of getting a bigger return out of it is a lot bigger versus MBIS. That's the preliminary research I've dug into. So something to consider that. We can just compare the models, the fundamental models. But I think overall you're going to get more volatility out of CoreWeave, but also a potential higher return in as of right now. We'll see how that works out as a lot of this really depends on energy and all that. So just taking that into account, I'll create a report around it and
Good.
do a comparison and see what we come up with overall. And I'll share that with you all on the Discord, and I'll send it through an email as well. I'll try to use Kerry, Samantha, and Bart and do sort of a podcast on it because I think it's a good question to compare companies like we did with Cipher and Iran. I did a couple days ago or last week. It gives you just a comparison between two. What is one aggressive? Is their model better than the other? I think those are good things to figure out how to position for the intermediate to long term. Is my take
When I
on
look
it.
at when I look at Nibius, it's definitely at the top of its range for a trade. It's fighting a lot of resistance. And when you look at
Yeah.
CoreWeave, and again, this hasn't been out that long. CoreWeave's definitely not on resistance; it's on support. So as far as
Yeah.
a swing, if I'm looking at these two stocks, I'm looking at CoreWeave as a potential candidate for me.
Yeah.
Because of the way the chart looks.
Yeah. And I think the other element is CoreWeave's only been public for probably less
Less
than
than 200
6 months.
days. Yeah.
Yeah. So, and then I think that if I remember right, the structure of their employee payment, payroll plan has a lot to do with stock. So I think if I remember right, correct me if I'm wrong, uh, this is the company come to or early December. A lot of these employees get to no, this is not the one. They one of the companies gets to the employees get to sell off uh their positions because they've been paid in stock, sort of like Palantir was. So it went through a phase. I don't think this was the stock. It was one other company that's doing that. But
Well, we opened up
Um,
right on support on CoreWeave today. This is support and this is open, so market's open.
okay.
I have one more to do here from Christina,
Okay.
IoT.
Then Mark, I've got something to share. Somebody was
Okay.
asking about one of the ratios.
Samsara, Samsara Class A. And we had some pretty big volume here. I don't know what happened on this exact stock. You came up, you can see on Friday you hit the 200 as resistance. Again, you're opened up a little bit higher, but under the 200. So again, if you're chasing it for a swing trade, I don't like buying outside of the upside Bollinger Band, and I don't like buying when I'm gonna unless I can get past this 200 right here. If you get past this 200, back test the 200, then it'll roll. So for me, I'd wait at this point. You have a big gap here, and I'd want to see it roll a little bit higher. But I like the way it's going. As far as an under the 200 stock, if we would, this is something I didn't follow, but you get in up here, you're under the 200, then you got lucky. Something happened here, which happens once in a while, and then it popped up. But now you're right up against the resistance level again. So, Trent, you have something?
Yeah, I do. It was asked about the VVIX ratio versus VIX, the ratio I have created. And I want to share that with you today where we're at. So for those who didn't hear my talk about this last week, the VIX volatility index is the represents the um, how options are being bought or sold against the S&P 500. The VVIX is the volatility of the VIX. So the VIX is the volatility of the S&P 500 measured by option purchasing, buys and sells, and the VVIX is the volatility of the volatility. So what this can tell you is if you do a ratio and you can simply put it into your trading views chart, you just type in VVIX divided by or slash / VIX, and it gives you this ratio. But it's very telling because what it can tell you is if the S&P 500 or the volatility is overbought or oversold, which gives you a idea, a better insight to how the volatility or the VIT or the S&P 500 is being traded. So if this ratio is above 7, it's an indication of overbought. If it's below 5, as we saw back down here in April, it's oversold. Now, when I look at this and I go back in time, I start to see um, a pattern. When I get up into this, December of 23, this August of 24, December of 24, we had a little bit of 1 day spike, but didn't close above 7 on the ratio back on August 28th. It indicates a overbought periods. We saw this back here in 2017. And then we see opportunities like in January of, the start of January of February of 2020. It gave us an indication of all of a sudden we have a very overbought environment here back in December of 19, just January of 2020. And then all of a sudden, the spike, it just drops, the ratio drops below 5. And that's when we got into March. And that's when volatility was oversold or overbought. So you can buy volatility, you can trade volatility. So this means it's oversold in a sense, and that created opportunities. So it's an opposite correlation in a sense when you see it down here, and that created a buying opportunity back in March of 2020, April 2020, and then if you remember right, the S&P followed suit, and we got back above 7, so it was overbought. There was too much volatility, and we got to a bottom in the S&P, and then vice versa. So what I'm looking at here is today we've approached this over um, in the S&P, this I'm interpreting this as a sort of a opposite of the S&P, that the volatility is so suppressed and the S&P is so high, this is starting to break down. And it's giving me indications that we are possibly entering a possible break down in the S&P and a pullback. And as I've talked about a couple of times over the last week or so, quite a few times, we're starting to see the S&P is starting to flip or a redistribution from the concentration in those 10 stocks, and the volatility within the S&P 500 or in the VIX, the volatility within the VIX is starting to heat up underneath the surface. Remember, we're not looking just at the top of the surface, we're looking below. We're trying to use volatility and things like this as indicators that is the core of the market heating up to a point that we're going to have a volcano explosion in volatility, bringing stocks back down to reasonable pricing, and see a repricing amongst the AI and really mega cap companies. And I think we're starting to see that kind of happen here. We saw that build up, from August of 24 into December of 24. And then we started to see that breakdown in February of this year. And that's where we had that bottom in April was created. Well, I think we're starting that pattern again. Now, how long does this go? It could go into the end of the year. We could see this ratio above 7 as we saw back here, where it played in this range for quite a while back in 17. It could go, for over a year, 2-year period before it actually breaks down. But I think this is something that you got to take a look at. But you can create this in your trading views or on stock charts or any of the other platforms by just typing in VVIX/VIX, and it'll give you this ratio, and you can chart it as well. So hopefully, Tim, that was helpful. And yeah, go from there.
Okay, we got a few more charts. You guys are keeping us busy. VFC, we had her under the 200 list for quite a while. We got in back at this level here. This is our cost basis. We came up, went sideways most of the week, and came over and hit the 9, which was my support on Friday, and that's where I got out because I didn't want to carry it over the weekend. We were up 8.25% here. You can see today we're opening up above the 9. So a lot of times we see these consolidate sideways, hit support and go up. But what I saw was this upper Bollinger Band starting to converge down as we're seeing the lower come up. That usually means sideways for me. And then I went back and I looked right here. Okay, the last time it was up at this high level. I'm just going to move this one. It'll let me. No, it won't. But if you look here, that's about where we are. So it's having trouble even getting past this level during earnings. So I took 8.25 and I got out. But you could still ride this up. But I think, we may be seeing some weakness a little bit. We're starting to see the rollover a little bit. You can look at the MACD, the histograms are getting smaller. When we look over, the flatness of the stochastic, and we're still at 70 at RSI, but some people say that's overbought, but I don't think so. But we could possibly hit and pop up, but I just want to take it and get out just because I see too many negatives and I do positives, and I'm very risk adverse, so that's why I got out of BFC. And then we have Alvo, ALVO. And this might be a tailwind. I'm not sure. Okay, Alvotech. This is nice. This is what we like to see. Come down to support. And then skirting support, we got the 9 come down, skirt support, and maybe start rolling back up. And we had a close right at the 20 on Friday, and here we're opening up right below the 20. I come down, I look at my oscillators. Oscillators are starting to cross over a little bit. So, on Alvotech, this might be a spot to enter, but you're going to have resistance definitely at the 20, and then you're going to see it up here at 863, and your support will be probably right down here where we have intermediate support and a double layer of support with the 9 right here. So again, we kind of watched this. I think we looked at it last week, but again, this might be an entry point you want to roll into, but be aware of where your resistance is, and also be aware, our Bollingers are still kind of sideways. And I'm looking down here, we're not at 50 yet. So on the RSI, we're getting closer, but we're starting to see some nice positive crossovers. So, Alvo maybe a play depending on your trading plan and depending on your risk tolerance. Whew, okay, I'm going to go back to bed. I'm exhausted.
One last thing we talked about. I mentioned app loving.
Yeah.
Let me show the chart on it real quick. This thing's up 11% right now.
Which is typical when you get added, to a S&P, because everybody needs to buy it by this Friday.
So if you bought this when we added it to the tell sheet 12 on July 28th, that is right here, right there. It closed the day at $370.96. It's at 541. Don't be a pig. Just don't be a pig. All right. Don't be a pig. Recalibrate. This has become a big portion of the tell sheet 12. Typical allocation is 8% in full allocation, is 8% in a position when you fully allocate. When you're getting up this high, I mean that 8% way out of whack. So taking some profits, because in my opinion, it will come down. If not to 500, it'll come back down towards this 470 range. It'll come back towards this trend line at some point. So just be careful. Just don't be a pig. Put your trailing stops in. Simple trading, simple strategy, trailing stops. There you go. All right, well, we'll wrap it up there. Thank you all for joining us this week. This should be a interesting week. We'll be back here tomorrow, same time, same place, and have a great morning. All right, Mark, you got anything last to say?
No, just be careful out there and get busy living.
That's right. Y'all take care.
Take care. Bye-bye.
See ya.
Live
Bye.